Hey everyone, this is the Volitional Science Network, and we've got Nima Mahdjour on the line once again to discuss some economics. Nima is a crypto and financial investor, particularly since 2011, which is pretty interesting because that's be a crypto investor. And he is also an entrepreneur. You can check out his work at economicsjunkie.com or follow his Economics Junkie page on Facebook, where he seems to be posting most of his stuff lately. And Nima, now that you're here, we want to discuss whether or what gives Bitcoin value. Why does Bitcoin have any value? Because as far as I understand from Screaming Hysteria on Facebook, that there's this bubble that's going to pop at some time, so therefore Bitcoin doesn't have any value. So can you explain to us what the Bitcoin bubble is and when it's going to pop?
So yeah, about that bubble talk, I would say that the people who have been calling it a bubble have been wrong for about 8 years at this point. And usually that's not how bubbles work, right? A bubble doesn't happen when every mainstream outlet and every idiot on the planet calls it a bubble. A bubble symptom is usually when all the idiots don't call it a bubble and only a few shunned voices call it a bubble.
Well, sorry, go ahead and finish your point.
So yeah, so I haven't talked about the value proposition of Bitcoin yet. We'll get to that, but that just about that bubble talk. It's just very prevalent and very commonplace, and that's not usually how bubbles work. You know, the people who call Bitcoin a bubble, they think they have discovered something, and they think they can sound intelligent and be the predictors of a big bust. But they're really just parroting popular opinions that are mostly propagated by amateurs who haven't been in the space very long, in my experience.
Well, and then from what I understand, what a bubble is, for example, we had the real estate bubble back in 2007, is a bubble occurs when you've extended so much credit that at some point it has to be paid back, but it gets extended beyond the ability of the people to pay it back. Well, in the case of Bitcoin, there's no credit being extended. To say that there's a Bitcoin bubble is like saying that there's a gold bubble.
Well, there's little evidence. Let's just say there's little evidence that massive amounts of people are buying Bitcoin on credit. That's accurate, I would say. You know, there's been investors who've been buying out of their own funds for the most part, and more people learning about it. And the bigger the network grows, the more demand there is, and the more people hold, and the more people withhold Bitcoins from the market. And in that sense, it behaves much like gold. So yeah, I would say there's not evidence of any objective characteristics of a bubble, other than the exorbitant price increase, which people don't understand. And you know, if people don't understand something, they're immediately going to try to rationalize it in some way.
I want to talk about that exorbitant price increase in a second, but first I want to call some more names, which is, if it's not a bubble, it's got to be a Ponzi scheme.
Right. So let's talk. So I'm just going to read the definition of a Ponzi scheme from Wikipedia here. A Ponzi scheme is a fraudulent investment operation where the operator generates returns for older investors through revenue paid by new investors. So my first question:
who are the old and new investors?
Who's the operator? That's the first question. Who's the operator who generates returns for old investors here? There's none. There's no such
there's
person.
No dividends.
There's no such person in the world of Bitcoin that collects funds from someone and distributes them to someone else. So this goes back to the amateur talk, right? People hear someone say Ponzi scheme and then they parrot it without ever even looking up the definition of a Ponzi scheme. Ask any person who calls Bitcoin a Ponzi scheme, what's the definition of a Ponzi scheme and how does it apply to Bitcoin? I'm curious to hear an answer that's coherent from anyone. I haven't heard any explanation on that yet from anyone.
Well, regardless of coherency, the fact that it's so volatile is the reason that it's something that's not valuable, right?
Well, the fact that it's so volatile, people think that immediately means that it's a speculative bubble, I guess, you know.
Right. And then, well, and what I want to do is also just address why exactly it is volatile. Because as far as I can understand from my amateur opinion, and I'll admit that it's that, which is why we got you here, is that the volatility is coming from the fact that it's brand new and nobody knows what it is. Right, it's been around for 8 or 9 years, which if you compare that to, say, the history of money, which has been around for 5,000 years, it hasn't had a chance for us to see what's actually going on. The second part is that as more and more people are discovering it, and as more and more people are using it, it's naturally gaining value.
Correct.
Right? And so as more and more people use it, the value is going to go up, and at some point, when, in quotes, everyone's using it who's going to use it, we should achieve some sort of stability, right?
Correct. That's my hypothesis too, that over the long term, because right now we have phases where suddenly we have big investors plunging in, driving up the price in a very low liquidity market, comparatively speaking. If we compare to the liquidity of the stock markets, bonds markets, the gold market, the liquidity in the Bitcoin market is still very low. And then we have, we may have a billionaire investor dropping a couple of $100 million.
Or taking it out.
Or taking it out. Whales splashing. What's it called? So that can cause a lot of volatility. But over time, the more and more people know about it and hold it and transact in a relatively smaller and smaller relative shares to the overall market share, the lower the volatility will go. And empirical evidence proves me right so far, because if we look at the Bitcoin volatility index, starting in, I think 2011 is when they first started, at least the one that I'm finding here on by bitcoinworldwide.com, the volatility index in 2011 went as high as 15% in terms of standard deviation of daily returns, and it's gone down over time. It's now peaked up a little bit because of the recent frenzy, but still, in the grand scheme of things, it's much lower than it used to be in the early days.
So, at what point do you think that we could start, because for the most part, no one's like trading in Bitcoin and then holding Bitcoins for the purpose of trading in it. People are either trading in Bitcoin and converting back to dollars, or they're trading in Bitcoin just to hold it because I think it's going to go up, right? At what point do you see that we're able to use this as we'll get in, again, we still have to talk about what actually makes it a currency, but at what point do you see that as a possibility?
Well, definitely when the volatility is closer to, I'd say, regular currencies, which is much lower than Bitcoin's volatility currently is. And when that will be, it's anyone's guess, I think. And if that'll ever be the case, because I'm also not necessarily married to the hypothesis that Bitcoin will one day be a big transactional currency. It may well not be that. It doesn't necessarily need to be that, in my opinion.
Well, I guess that broaches us to another thing where, okay, it doesn't have to be Bitcoin, but could it be some other cryptocurrency? So if we replace the word cryptocurrency for Bitcoin that we used in this entire conversation, do you see some cryptocurrency or some group of cryptocurrencies being a transactional unit as opposed to either investment unit or something that just kind of greases the wheels between dollars to dollars or whatever currency?
I think so. I think it may end up being a side chain of Bitcoin or some kind of currency that builds on top of Bitcoin. There are, in fact, currencies like that today already. There's a cryptocurrency called Tether. And Tether uses the Bitcoin protocol to record transactions, but it's basically backed by dollars. So there's the corporation behind it that guarantees or promises in kind redemption in US dollars if need be. But you can use them as though they were a cryptocurrency, which makes it easier transactable and more secure, and helps with privacy and things like that. A lot of Bitcoin exchanges actually use Tether to facilitate trades between crypto and dollars.
And then, just to be clear, you're not necessarily up-speaking Tether here. You're up-speaking the idea that new cryptocurrencies can be made that are based that use the Bitcoin blockchain. Do I have that right?
Exactly, and they are being made. There are protocols that run on top of Bitcoin, and there are cryptocurrencies that run on top of it. Absolutely.
Well, that makes me think of another interesting point, and something that I've heard a lot is that I've heard the criticism that there are inherent problems in Bitcoin that doesn't necessarily make cryptocurrency a bad idea, but it makes it so Bitcoin in the future it isn't going to be able to hold out. Which, if I look from a meta perspective as opposed to an expert on this, and I say, okay, this thing might be useful. It's a brand new invention on the human scale. It's kind of the Wild West out there right now. Based on that, I would assume at some point, out of the thousands of cryptocurrencies that are out, and I'm sure the tens of thousands that are going to come out after this, there's going to be like a Walmart or a Costco that rises to the top, and we have no way of guessing which one that's going to be.
Yeah, that's so. I think it could very well be that there's going to be a Walmart, but then there's also going to be a Ross and a Amazon, a Sears, or whatever. So I think it could well be an environment where you have continually competing cryptocurrencies, where no one particular currency is ever necessarily replaced, but you just have different flavors for different use cases. The analogy of Bitcoin with a corporation I don't necessarily find satisfactory. I like the analogy of Bitcoin versus the internet protocol, for example. Bitcoin is, in essence, it's a protocol, much like TCP/IP was a protocol that facilitated, or still does facilitate, internet traffic. And it's sort of the base layer of most of our communication today. But on top of TCP/IP, we have HTTP, we have FTP, and then through HTTP, we transact HTML. And Bitcoin could function.
Let me slow you down there, because that was a lot of geek speak for people who have no idea what any of that is. So with the TCP/IP, when you say that's what was the term you used? The base layer.
The base layer. Mm-hmm.
Yeah. So the base layer. What you're referring to there, because we all know that deep down computers are ones and zeros. The TCP/IP are the ones and zeros, right?
Mm-hmm. The TCP/IP is the convention by which ones and zeros are transacted between computers.
So TCP/IP is sending the ones and zeros back and forth. And what you're saying is, on top of TCP/IP, you could have something like HTTP, which takes these raw numbers, let's call them out, these raw ones and zeros, and says, okay, I want you to organize these ones and zeros this way, in the HTTP way. And then once you do that, you get some useful information. And then on top of the HTTP, you could say, okay, I want you to organize the HTTP information with the HTML protocol, and then we can create a website with that. Do I have that right?
I don't know if HTML is a protocol. It's more of a language, but I guess the way a browser interprets that, there has to be a convention. So in a way, you're right. HTML is a language, and the browsers understand it. There's certain conventions to interpret certain characters, much like a computer listens for, or a IP listens for a handshake, HTTP 200 request or whatever that comes from another computer, and then that in turn is transacted through TCP/IP. So, but yeah, basically that's in a nutshell, that's sort of how information is transacted on the internet.
Got it. So what you're saying, and I think I got this, is that Bitcoin, and now I'm specifically referring to Bitcoin, not cryptocurrency in general, that Bitcoin acts, or it seems to be acting, or has the a greater potential to act as the ones and zeros of the cryptocurrency world, where I can to put the beginning and the end. My computer receives ones and zeros, and at some point uses HTML to show me a website. Where Bitcoin can be those ones and zeros, and some other cryptocurrency ends up being the HTTP or the HTML or whatever other thing that's put on top of it.
Or like basically you could say, let's say we have Bitcoin, and then on top of Bitcoin we have something like Counterparty, which is a cryptocurrency that actually exists, and Counterparty can interpret smart contracts. So you could look at the smart contract sort of as analogous to the HTML in the internet world.
So let me deconstruct what you just said there. I still haven't fully figured out what a smart contract is. I think I'm pretty close, but I think what you just said is that some information gets put into the Bitcoin blockchain. And what's the name of this currency that you just said?
Counterparty.
Counterparty takes that information and says, okay, I'm going to apply the Counterparty protocol to this. And from that, we'll say, okay, here's the contract that was written into the blockchain. Do I have that right?
Yeah, honestly, I don't know how exactly I'm not a counterparty expert, but on a high level, it's basically it's another coin that stores it's another software that stores some information in the Bitcoin blockchain, and some information is maintained in the counterparty blockchain. But it's always references the Bitcoin blockchain, uses the Bitcoin blockchain for timestamping. And a smart contract is basically just a statement of do this and that if so-and-so, or some point in the future, send money to so-and-so in case I die, or whatever,
So, well, I mean, let me see if I understand it, and you help me out with this in a conversation that we had earlier, which is it's just a contract like any other contract. However, because it's put into this blockchain, the amount of confusion over who signed what when and what applies now, and did the lawyer say this at that time, and was this person blah blah, it's written in there and everyone can see it, right?
Everyone can see it at the point of execution at the very latest, depending on how everyone can verify that the contract was written into the blockchain at one point, or that some kind of way to verify that that contract existed at some point was written into the blockchain.
Okay, so now trying to bring this back to what we were talking about with the Bitcoin being the potential base layer. What's to prevent another person from making a better base layer? Cryptocurrency. Yeah,
I mean that's totally possible, and we see Litecoin, Ethereum, other cryptos sort of competing for market cap or market share, I guess, or maybe they're not even really competing, but sort of just bouncing things off each other. Bitcoin has the advantage that it's been there, that it was there first, that it was very early. And it has a very experienced community. It's very battle hardened. It's gone through a lot of difficult scenarios, a lot of problems over time that had to be solved. So it's very battle hardened in that sense. And it's a growing and constantly improving software. Some people talk like, oh, Ethereum can do so-and-so and Bitcoin can't. Well, that's assuming that Bitcoin is never going to change, which is just not the case. Bitcoin changes all the time. There are constantly updates pushed out. It's not easy to get an update through the community, and that's for a good reason, because it's not supposed to be easy. There have been instances, for example, Ethereum sacrificed its immutability by having their creator intervene and roll back the blockchain because some people lost money and were butthurt about it. So that doesn't really happen in Bitcoin, can't really happen anymore, because the community is so decentralized, and changes are being made. The focus in Bitcoin, from my understandings from following it, is currently more on scalability, using intelligent coding, intelligent discoveries and methodologies to enable more transactions per second, and also privacy is still a big issue. I've actually read recently that there's been a big breakthrough by a Stanford computer scientist who found a very efficient way to enable full privacy on the Bitcoin blockchain in a manner that is much more efficient than all the other solutions that are out there right now. There's a coin called Zcash or whatever. And that's just, currently more of a focus of the Bitcoin community. I think doesn't mean you can't already do smart contracts in Bitcoin. Doesn't mean that the smart contracts aren't going to get more complex and more interesting at some point. It's just that, it's not really been a high priority in the community.
You another conversation we had prior, you gave me a very good example of the adaptability of Bitcoin, and the fact that, so even before that, you mentioned that Bitcoin has the advantage of it was the first guy on the block, and it's gone through more battles, I guess you can call it, than everything else has. And so it sounds like that Bitcoin kind of has more people working on it. It has more brain power directed toward it. And you gave a perfect example of this, which was that another problem that Ethereum has come into, because Ethereum was designed for smart contracts, and again, with my limited understanding of smart contracts, by writing the full smart contract into the Ethereum chain, the Ethereum blockchain, in the short amount of time that's existed, is actually bigger than a Bitcoin blockchain at this point. Am I right?
Yeah, that's. I mean, I found that to be pretty disastrous news, from the standpoint of Ethereum, because after, I think, maybe 2 years, or maybe not even 2 years of existence, its blockchain had already grown larger than Bitcoin's blockchain. And it's only, I presume it's only going to continue to grow. Maybe they're going to have solutions for it or whatever. But I'm just saying there's some problems that they run into that maybe they didn't consider problems beforehand, or maybe they don't even think it's a problem. But at one point, you may run into a situation where not a lot of people can run Ethereum nodes. And then who's going to, is Vitalik going to be the only one running his Ethereum supernode? I don't know. Honestly, I'm also not really an Ethereum expert. I'm just pointing out that there have been some of these challenges that, in my experience, Bitcoin developers have been more careful to avoid over time.
Well, and then what I find super interesting is I don't remember if this has actually been implemented yet, but the idea that instead of writing the whole contract into the blockchain, you can use a hashtag that says, okay, there's a contract somewhere. You can see in the blockchain that there's a contract somewhere, and that contract somewhere is saved somewhere else.
Yeah.
And you have to go to that other place to find it. Exactly. And that because Ethereum screwed that up, I don't fault them for it. I mean, who knew? Who would have thought of that in the future? But because Ethereum screwed that up, the people with Bitcoin could say, "Hey, wait, we could do that better."
Yeah, I mean, to be fair, I don't want to conclusively say that Ethereum screwed that up.
Yeah, that was rough.
Maybe they have a way to deal with it. I don't know as much about Ethereum as I know about Bitcoin, but obviously the blockchain growing so fast and so large seems to be evidence that they're putting a lot of junk into the blockchain. Bitcoin, I forgot the acronym right now. I'll look it up, but there is a methodology that was proposed. Maybe it's already being used for Bitcoin smart contracts. I'm not sure, but basically it involves, you don't actually have to write the full smart contract into the blockchain. You just put a hash that you generate out of the smart contract via some one-way hash function that and then you keep the contract somewhere else, locally, or you store it, wherever. And when the time comes to execute it, you can just prove that the contract was written by hashing that function that you have, by comparing to the past hash in the blockchain. And you don't need to store the entire contract in the blockchain, basically, in order to execute it at one point.
Which, just to bring this back even further, we talked about the momentum of Bitcoin and whether or not Bitcoin could be phased out by something newer and better. the fact that Bitcoin has so much experience, so much mind power toward it, and now with these, it seems to be approaching an infinite number of alternate coins. It can learn from the mistakes of each one.
Yeah, totally.
Just as each new coin can look at Bitcoin and say, okay, Bitcoin isn't doing X, I can supply X, and there seems to be this reciprocity of innovation that's occurring between Bitcoin and everything else.
Exactly. I mean, anytime something happens that makes a particular altcoin so popular that people move out of Bitcoin, people in the Bitcoin community are going to pay attention, and they're going to most likely probably implement those features on Bitcoin. So what a lot of people have been saying over the years, that all these altcoins that are floating around, they're basically just a giant test bed for potential Bitcoin features that, Bitcoin developers don't necessarily want to put into Bitcoin right away, but they just let others deal with it. And, if it works,
test it out.
Yeah, like there is actually, for example, segregated witness, which is a feature that's now in Bitcoin as well, was first implemented on Litecoin, even though I think the first ideas came in the Bitcoin community. But then Litecoin rolled it out first, and then now Bitcoin is doing it. So what? So the Bitcoin is very adaptable and can reference and look at developments in the altcoin market to improve its feature set.
So now that we've taken a little time to discuss what's cool about Bitcoin and maybe calm down the bubble and Ponzi scheme hysteria and why it's going to crash all of a sudden, we still haven't talked about why is Bitcoin valuable. And I read an article that you wrote in the past that I think was very interesting, and we're actually going to bring this into modern monetary theory now and compare Bitcoin to a real currency, because even from many modern monetary theory folks, from many MMT folks, they criticize Bitcoin and they say it's not a currency because there's no government that taxes it. Now, as we've discussed before, the reason that the US dollar has value, it's not because it's traded for oil, it's not because it's backed by gold or silver, it's because the United States government demands it as taxes. And because you need to pay your taxes, you need to have some of that money to pay it, and that's what makes the money valuable. So the MMT guys are saying, well, that's not happening with Bitcoin or any other cryptocurrency, so therefore it's not a currency. What do you have to say to that? Right.
So I would say that's false, because in the world of Bitcoin, we have what's called the Bitcoin miners, which are the computers that create new ledger entries in the Bitcoin system. So any transaction that you make is always picked up by some miner, added to some block, added to the permanent ledger called the Bitcoin blockchain. And in order to do that, the miners demand a fee from you. You can choose not to include a fee in your transaction, and it may take forever for it to make it into the blockchain. It may never make it. Or you can choose a higher fee, and your block will be included right away, because the miners always want to maximize their revenue. So what is taxes in the world of fiat currency? I would propose, and I haven't seen many people, I don't think I've seen anyone make this case. I would say that in Bitcoin, it is the fees that you pay, and you pay the fees.
And to be clear, sorry, this wasn't expressed specifically. Those fees are paid in Bitcoin.
Yes,
correct.
In the Bitcoin blockchain, you can only pay your fees in Bitcoins. There's no other currency or crypto coin that you can use to pay your fees. Ultimately, there has to be some Bitcoins sacrificed by the person making the transaction, given to the miner who successfully mines the block with the transaction in it. And ultimately, the way I would put it is, the reason why Bitcoin has value is because it's the only token that's acceptable in order to add a transaction to the blockchain. That transaction doesn't necessarily have to be just, the transfer of Bitcoins from person A to person B. It could also just be to store the hash of a particular document in the blockchain in order to prove the existence of that document, and in order to be able to prove it without a doubt that a particular document, digital document, or a scanned real document has existed at one point in history.
So what you're saying, correct me if I'm wrong, is that Bitcoin, the network and the miners, and whoever, is it the miners that are the ones that are writing stuff into the blockchain?
Mm-hmm.
Okay, the miners who are writing stuff into the blockchain, they're able to provide a useful service. An example of this service is moving the coins around itself, or writing hashtags in, which can be useful for smart contracts.
A hash, not a hashtag, by the way. It's just a hash.
I guess I'm getting old. I still haven't figured out how to use Twitter. So they put a hash into the blockchain, and because this is a useful service, and the only way to pay for that service is with Bitcoin, that creates the value itself. In the same way that when the government spends money and then demands it as taxes, even though the pieces of paper or the digital marks on your computer inherently are valueless, they become valuable because you need them literally to protect yourself from the violence of the state. Exactly.
That's the analogy. In the world of Bitcoin, you need to pay fees in Bitcoin to get access to the blockchain. And as long as there's value, then here's where I
throw in the blockchain.
Here's where I throw in the caveat. I'm not saying that Bitcoin can never, that it will never crash, or that it's been irrefutably proven that it'll always have value. I'm just saying, as long as there is value in having access to the blockchain, there's value in having Bitcoins. Because you hear a lot of people, this is another trope that amateurs like to parrot. Well, I see value in the blockchain, but not in Bitcoin.
Bitcoin gives you access to the blockchain.
Bitcoin gives you access to the first, the largest, the most secure, the biggest, baddest blockchain of all of them, but somehow the token that gives you that access is worth nothing. I've never seen any of those people make that leap, or explain that leap that they're making.
Well, and then I also want to bring in this element, because I mentioned that the 5,000 year history of money is that for 5,000 years, money, whether it's made of gold or iron or digital currency or whatever, essentially money has gained its value from the state demanding it. And the ability to do this is so valuable that the state invented this concept called counterfeiting, where if you try to make money, they will throw you in jail. And so the only option that we've ever had as a currency is that the currency has value because of violence, and the violence being that if you don't use it to pay your taxes, the state will come and get you and or take your stuff. So we've never had an option to see otherwise, because the state will try to throw you in jail if you're trying to do it. But with the cryptocurrency, because it's so decentralized, there's no one to throw in jail. Exactly. There's no doors to kick down. There's no one to shoot. So suddenly we have the ability to create what may be currency valued by something else.
Yes. It's basically the voluntary service of giving you access to the blockchain, instead of I'm going to kick down your doors and take your stuff. That
Can you say that again? I think it clipped out.
The service of allowing you voluntary access to the blockchain instead of demanding that you pay X amount in taxes is what gives Bitcoin value.
Well, and then that opens a crazy door, because the next question becomes, well, what else can we do to give a cryptocurrency value? Right? So, for example, the smart contract thing.
Sure. No, I mean, that's the thing. There's different things that you can do with the help of a blockchain. There's different reasons why a blockchain has value. That fact is not even even in the mainstream. Now they all admit that. So there's lots of things that in the end may end up giving Bitcoin its value that you can do with a blockchain that you were never able to do before. You were never able, before Bitcoin came around, there was no way to prove the existence of a document without a third party. Impossible. Now you can do it. Absolutely unique, devastating.
That's mind-blowing. That's historically,
mind-blowing,
civilizationally, societal blowing.
Exactly.
And I want to bring up the term I used earlier, which is Wild West. Again, if money has only ever had value from violence, and anything else was squashed because it's a really valuable thing to have control over, now that the free market has access to this, and of course by free market I simply mean voluntary exchange in the absence of violence. Now that the free market has access to this, suddenly it's again this Wild West of we can make anything we want, value by anything we want. Let's just try everything out and learn and get better and try more stuff out.
Yeah, exactly.
So this brings us back to the question, and I don't think we have an answer for it. I think we have a good argument to make, but is Bitcoin, and by Bitcoin now I kind of mean any cryptocurrency, is Bitcoin a currency or not? Right.
So I think, the criteria here is, can it be used widely in exchange? Money is it's not binary. There's things that are more like money and things that are less like money. So I would say currently it's probably accurate when people say, well, it's not really, you can't really use Bitcoin to run a large scale corporation on Bitcoin alone because it's so volatile, so
and I would even argue there's not enough people accepting it. Can you pay everybody that needs to be paid in the Bitcoin?
Right. So those are the things that it goes back to. It will be less volatile when more people own it, when it's commonplace to a lot of people. Think about it. People who are born now, to them, Bitcoin is going to be totally normal in 20 years or so.
I didn't even think about that.
Yeah. So we're at the beginning of something huge. And just because it can't be used for those use cases right now doesn't mean it's always going to be like that. I don't understand why people always, try to stay in their thinking box like that.
Because it's scary.
Right.
It's scary.
Yeah.
Well, for example, we both saw this. I won't say his name, but we saw an MMT guy who said that the reason Bitcoin, or an example of why Bitcoin isn't a currency, is because Puerto Rico is still in shambles and Bitcoin hasn't helped Puerto Rico get out of its mess. Whereas, because the U.S. government has the ability to say, okay, just spend the money and like create the money and take care of it. Well, you can't do that with Bitcoin, so therefore Bitcoin isn't a currency.
Because Bitcoin hasn't solved all of the world's problems yet. It doesn't have any value. It's pointless. I haven't seen the paragraph in Satoshi's original Bitcoin white paper where it says that Bitcoin was created to solve Puerto Rico's debt crisis. So I might be missing something, but I haven't seen that.
I might be missing something as well. But with that, I think we've done a good covering of the subject. And we're going on about an hour here. So I think we'll wrap it up. I'd like to say thank you again, Nima. Your insight is always super valuable for me, at least. I don't know about everyone else. I hope they're listening to you. Seems a lot of people aren't, and they're not making as much money as they could have been. And I'm happy to have you back on anytime. And thanks again.
Thanks. Great questions, Dylan. Talk to you soon.
Bye-bye.